want to say thank you to everyone that's here, and special thanks to the Virtual Propane Expo for putting this on, and to Tiger Payment Solutions, who's really supporting and sponsoring this entire event. For those of you that don't know, Tiger Payment Solutions has been in our industry for some time, and the Tiger team is made up of a bunch of industry veterans that know our industry, the fuel delivery industry, as well as credit cards like the back of their hand. They really do help a lot of fuel companies that I know personally. They are energy people first and credit card experts second. So no processor understands the energy industry better. When you partner with Tiger, you're going to receive fully integrated solutions that are backed by unparalleled customer support. You'll never speak to a call center or be asked to leave a message. The Tiger team answers their phones in person around the clock, which is really nice, including nights and weekends and holidays. Which when you're having problems with your payment portal or something like that, it really is super important. So contact Tiger to reduce your costs and your back office workload while dramatically improving the customer experience. Thanks again to the Tiger team for supporting this entire presentation by Bob. It's aptly connected so that Bob's going to teach us how to really manage the AR and the accounts receivable and accounts payable, and the Tiger team specialize in helping us do that too, and really helping us give us the tools to move forward. So Bob, thanks again for doing this. Bob really is going out of his way to put this presentation on to serve our industry, and he's been doing this kind of training for dozens and dozens and dozens of companies for over a decade. So Bob, thanks again, and I'll hand it off to you.
Okay, thank you, Bill. Welcome to our webinar on how to reduce your mountain of receivables. We're looking at creative, credit, and collections. So credit and collections is probably the single most important thing a heating fuel company does. Now more than ever, we have to walk this knife edge between the need to retain our customers and the need to get paid quickly. It's not just about making sales, it's about getting paid and keeping the customer. And today we're going to take a look at how we can go about doing that. Now, please note, we're not here to provide legal advice. This session is designed to assist you with techniques you need to collect money owed to your company. You must be aware of all the applicable regulations regarding your debt collection in your area. If you're not sure of the laws in your state, Google the State Department of Finance or your state attorney general and click on credit and collections, and all of the laws are there for you to read. So be sure you're aware of that before you get started. Some of the things you're going to find almost every state prohibits the following. First off, threats. Debt collectors may not threaten any action you're not about, you cannot or will not take. So no idle threats. If you threaten it, you've got to do it. You can't harass people. Debt collectors may not harass, oppress, or abuse anyone. Unreasonable publication. The law prohibits a debt collector from notifying other people about the debt that they owe. You also can't do deceptive representations. Debt collectors cannot engage in deception in an attempt to collect the debt. You can't say that you're the sister or the brother, when you're trying to get through to the creditor. Unconscionable means. Debt collectors may not use unconscionable methods to collect the debt. So in other words, if it seems wrong, it's probably wrong. Now, of course, the hardest thing about this is asking people for money. Especially we have our illustration here is, I think, sort of apt. That this is what we all picture, the person we all picture when we're asking for money, a poor person, poor older person who's struggling with debt and worrying how much they can turn their thermostat up and how mean you're going to be to cut them off and all that sort of thing. You're not going to get very far if that's the way you feel about this. What you have to remember is it's their job to pay you. You made a promise to them that we'll deliver fuel and we'll fix your heating equipment. And they made a promise to you, I'll pay for it. And they're breaking their side of the promise. So you have to view what you're doing in a more positive light. What you do is important because it keeps your company solvent. I don't think your company is a nonprofit organization. And at least it isn't supposed to be a nonprofit organization. Some years, it's a little iffy. But while you're doing this, you have to definitely recognize how the debtor feels and have empathy. You want to try to avoid putting them into a position of being too embarrassed to deal with the problem. You want to be able to talk to them and do this in a reasonable manner. And try to help them, if you can, help them find assistance. We're finding there's a lot of programs out there to help people that are in trouble. And you should be aware of what those programs are and what the requalifications are. So if you find a customer who is qualified for assistance, that you can help them get set up. The keys to success are, first off, you have to have a clearly defined credit and collection policy. If you don't have a set policy, then every call, you're making it up as you go along. And that's exhausting. It's very hard to be creative under pressure. You know, whereas if you have solid guidelines, you have tracks you're running on, makes your job a lot easier. You don't have to worry about being creative. You can focus more on the customer and getting them into the program you're already aware of. An important thing to have is, of course, a credit application. I'm going to, really stress that you get them on any new customers. Of course, the problem comes in, what about older customers that you don't have a credit application on? And we'll talk about that later in the program. You definitely want to do credit checks on new customers. You have to be careful about invoicing promptly and sending statements regularly. If it takes you 4 weeks to get around to sending out an invoice for a service call, then the customer is going to start counting when do they owe you the money, not from the day the service call happened, but from the day that they got the invoice. So you just gave them another 1 month loan is what you did. So be sure you're invoicing promptly and sending statements on a regular basis. Be sure that you have a way that you can access the assistance agencies. So if somebody is qualified, that you can plug them right into the program and get them set up so that they can get any help that's available to them. You want to have collection agents or attorneys that you can call on if everything goes south and you aren't able to get the money. You'll need to have those people's help, and it would be much better to line that all up before you need it. It's critical that you have a documentation trail, that you document everything you did, every conversation you've had with the customer, so that you can build on that in the future. And you need procedures that you follow each month, tickler files, things that you do every week to make sure you don't forget anything, like checking budgets to make sure everybody's paying on time, those sorts of things. And you also need be sure to put address service requests on for skips. So anything you send out, be sure on the envelope it says correct address correction requested. So if they have left, that maybe the post office can give you the address that they've moved to so you can find them. Credit terms. You should definitely have clear-cut credit terms, and you know what they are. And usually in our industry, the credit terms are usually 30 days. The question is, this year especially, have your credit terms suddenly slipped from 30 to 60 without your approval or awareness? That will happen if you don't do something about them. This tends to happen. There is definitely a slippage in these credit terms. Many dealers have gone to different strategies to get this to happen faster. Prompt pay discounts, like cash in 10 days, gets a special discount. Things like that are definitely worth considering. 15-day net. You want to tell them it's 15-day net, even though it's 30-day collection. And definitely you want to start collection activities the day they go beyond the credit term. So that would be day 31. Because time is money. The window of opportunity to turn our receivables into cash is limited. The longer you wait, the worse your chances of collecting, and the less money you're going to collect. Also, the current monetary value of the debt rapidly decreases thanks to your borrowing costs, because your company has to probably borrow money to fund their accounts receivable, certainly in the busy time of year. So you're paying money to borrow, paying bank money to borrow from them to fund your customers not paying you, okay? Also inflation and just the cost of the collection effort. Every time you call the customer, it costs your company money, your time. And you have to keep that in mind as well. So the key here to credit management is the second word, management. You have to manage your receivables. Some tricks is to get as many customers as you can on a budget. And maybe if you have a lot of them on budget already, maybe it's time to go to a 12-month budget instead of a 10-month budget. 12 months, of course, the payments are smaller, and then it just keeps rolling along. There's no weird summer off thing where customers kind of forget that they're supposed to be paying you every month. Another trick is to constantly reevaluate your budget customers. Make sure that you set the budget high enough. Are they using more fuel than you thought they were going to? Well, maybe you want to look at that. Have prices gone up on the fuel, or have they gone down? You definitely want to start collection activity 31 days from the date of the last open transaction. There's tricks that people can help you too. Talk to your bank about automatic funds transfer. There's automatic clearinghouses, internet banking, and of course, credit cards. Know how to help your customer apply for fuel assistance and how to access help from charitable organizations that may be available. As far as budget plans, I think one of the tricks is to offer budget plans to new customers all year long. I know a lot of companies I've worked with said, oh, we can only set up budgets in the spring. And if they sign up in December, they have to pay 30 days net for the first couple months until it gets to spring and we can start them off. Why? If somebody comes in June or January and becomes a new customer, why don't you give them a 6-month budget plan and then start them off on the new year with the new plan. That way they're on a budget right from the beginning. You don't have to have an uncomfortable conversation in June and try to get them on right away while you're talking to them. So definitely urge you to consider doing that. Once again, the 11 or 12-month plan would be worthwhile, constantly looking at them, recalculating them. Question, sending budget customers monthly statements. This can be tricky. Often customers get confused with these statements because they think, well, don't I owe you just so much a month? What's this balance at the bottom of the page? Is this how much I owe you, or is this my budget payment? So if you like getting a lot of phone calls, send out monthly statements to budget customers. But if you do send them, be sure that you write on the statement what's going on. This is what you owe is your budget payment. You don't owe the balance on the statement. Do you have incentives for budget customers making payments on time? Maybe at the end of 12 months, if they've made every payment on time, maybe they get a special discount. Or what happens when they get one payment behind? What do you do about that? What about if they're 2 or 3 payments behind? What if those payments are in the beginning of the year and they're still running a credit balance? They have a big tank and it hasn't been filled yet. And here we are, November. They owe you 3 credit or 4 budget payments, yet they still are running a credit balance. Do you get after them? I mean, technically, they've violated their promise. What do we do about that? So you should have a clear policy about that so that so you don't have to worry about it, and so you treat everybody fairly and consistently. When do you cancel a budget and put them on pay-as-you-go? I mean, how many payments behind do they get before you finally say, hey, you obviously don't understand this. It's not working for you. Let's just go with the 30-day, for you. What about service plans? Do you put the service plan onto budget? Not a bad idea if you want to. Be sure you know that up front when you're considering the amount for the budget payments. Another question some companies will do is roll the old balance from last year into next year. Is that something you want to do? It's possible. A lot of companies do it. But here again, what I'm stressing is that you want to have a plan so that you say, yes, this is what we do. We will roll the old balance, or no, we won't roll the old balance. You can't start the new budget until you've paid up last year's balance. And then finally, a great idea, let them pay for the budget plan on a credit card or mobile payment or electric funds transfer, something that's just automatic. They don't even have to think about it. The trick with good customers is getting off on the right foot, starting them right. You want to protect the front door when you're processing applications. If you get started right, there's going to be a lot less disruptions and a lot less problems like going forward. It's critical that you implement and conduct proper due diligence when processing new credit apps prior to establishing new customers. It all starts with that signed credit application. The trick is you want to get multiple names on that, you want multiple contact information, get as much information on that credit app as you can, because it's going to be a valuable tool later if you have to do collections. A lot of people don't like this idea, but I really like to see someone go to the house if that's possible. The first thing is, if you go to the house, you can notice, do they have big, heavy furniture? Is it all unpacked and sitting there? Or is everything in boxes and they're sleeping on a mattress on the floor? The guys everything's in boxes and the mattress on the floor, they could be out of there in 24 hours, leaving you with a big fat debt. Whereas if they've got all the family heirlooms are unpacked and all this big heavy furniture, well, they're not going anywhere in a big hurry. So just seeing how they live, seeing what the house is like can be very helpful in making credit decisions. Talk to the applicant, tell them all the great things you offer. check the oil tank. In some states, you really have to check the oil tank. Remember, you're taking on a responsibility. The minute you touch that tank is yours. So maybe a quick tank inspection would not be a terrible idea. Look at the heating equipment. Especially if they want to have a service plan, they're going to be asking. Service plan is kind of like a life insurance policy. Well, to get a life insurance policy, you have to have a physical. So this would be that same sort of thing. While you're there, check the heating system, and be sure you get a good set of directions and a fill location for oil. Where is the tank? How do we get to it? Okay, all these things are important to figure out. Credit application itself, it should definitely have the terms of the agreement clearly spelled out, standard rates and conditions, what you do about late fees, when you add interest charges, what happens with collection costs and/or attorney fees, who pays them, and agree to have their credit card charged for deliveries and service. If they don't agree to do that in writing, you may have trouble collecting that. I would agree. I would suggest that you have these two sets of language on the terms of agreement. By the way, there's a handout that goes with this seminar, and I encourage you to download it and kind of keep that as a Word document because it has all this language on it, and you can copy it so you're not busy trying to copy off the PowerPoint now. And the wording, first thing you should say is payment is due on delivery. Service charge of X amount of money is going to be added to all our balances over 30 days or older. The annual rate of the service charge is whatever, 18%. If you don't put that in there, then you really can't collect it later. You also want to put down something like, I acknowledge and understand that if the account is turned over to an attorney or agency for collection, I hereby agree to pay 33% collection fees or attorney fees, including court costs and filing fees on the unpaid balance. Here again, you might not get that. The judge may throw that out, but if you don't ask for it, you certainly won't get it. Okay, so it gives you something to negotiate later, even if you don't ever get any of that money. Okay, then you want to do a basic credit check. Okay, there are credit bureau reports. You want to get bank information. You want to get how long they've worked, where they've worked, maybe the last couple of jobs, see if they're bounced around a lot, if there's big, weird gaps in their resume. Of course, a lot of people are going to have a big, weird gap in their resume this year from around about March until whenever, August or September. But other than that, okay, other gaps and how long they've worked where they are. Do they own or rent? If they owned or rent, how long have they been in the apartment? How long have they owned the house? The big three credit agencies are Equifax, Experian, and TransUnion. And, check one or the other of them. And one of the most important things that a lot of people don't talk about that you want to ask the customer is, what's their side of the story? Tell them, look, I'm going to run a credit check. And when we do that, are we going to find anything in here that you'd like to tell me about? Tell us your side of the story. Because we've seen a lot of cases where a customer has had a dispute with somebody they bought something from. Let's say they bought something from Home Depot, and it was a refrigerator or something, and it was delivered with the whole side was kicked in because somebody damaged damaged it shipping. And you said that, you weren't paying for it, and Home Depot sued you for it, and Home Depot, just to get even, slapped it on your credit report. So, you might want to say, well, I had a dispute with Home Depot. Here's what happened. And you're going to find out that they were upset about that. So, it's just very helpful. It gives you a customer a chance to tell you the story before, so that you can look at it and say, oh, okay, I see. I can see their point. I can see their side of it. Or, no, they're completely wrong about this. The company's right. This is not a good thing. The credit score is a good tool. There's a couple different ones. Fair Isaac is FICO, TransRisk and Vantage Score are just some of the programs that give you credible third-party information. You can go to annualcreditreport.com and you can run credit scores from any one of the big three, Experian, TransUnion, and Equifax. The one from the FICO score, which is from Fair Isaac, the numbers you want, it's kind of goes up to 850 is the highest it goes. So you're looking at something, if it's under 580, that's pretty risky. They've had a tough time, okay? 580 to 699, there's some risk. There may be something that happened in the past or just not a lot of credit history. 670 to 739, that's kind of average. That would be okay. 740 to 799, that's great. And anything over 800, yeah, you can loan them as much as you want. That's exceptional. There's some warning signs that you may discover while you're doing the credit check. Watch out for anything that would indicate a weakness in the ability to meet obligations. So for instance, current litigation. Are they being sued? And especially, are they being sued for non-payment? Bankruptcy. You'd want to know the story. Maybe they've been bankrupt once, twice, 5 times. I don't know. Do you want to give them credit? Tax liens, foreclosures, and drastic changes in lifestyle, death in the family, divorce. These kind of things have a big impact on people. You could have a divorce situation. Divorce is always tricky because they split the money, so how do we handle that? We also can look for positive indicators, 3 to 5 recent good credit trades. That's great. They bought a car, financed a big appliance on their credit card, good steady employment. They've worked at one place for a nice long time. They own the house. They've lived in the community for a long time. The trouble, one of the things you want to watch out for is maybe it's too good. If they've lived in that house, they own it, they've lived in it for a long time, that means they've been buying fuel from somebody. And the question is, who? And why are they not buying from them anymore? Okay. So that might be something to look into. If they're coming to you in January out of oil and they've lived in the house for 5 years, yikes. Okay. Now, it could be that their supplier screwed up and let them run out. And this was the 4th time they've let me run out and I've had it, but I'd want to know the story. For residential customers, I think credit checks or references are probably overkill. They're just going to put down their friends and relatives as references anyway. So, what's the point in calling them? It's good to ask anyway, but, I don't know what you're going to learn if you're going to learn a lot. What we have to be careful about is half steps, being indecisive about this. Ships against deposit and load to load. Are these good management tools or are these just being indecisive? Okay. Load to load is terrible for distribution. What that means is they don't get another delivery until they paid for the last one. Well, look what you're doing in distribution. What happens is customer comes up due and especially if it's the customer's out in the boondocks. And what you've probably done, your distribution company, part of the company has lumped together all those long drive customers into one route. And they do them all at once. Well, suddenly one of them is a load to load who happens to have not paid for the last load yet. So you're given the ticket to call them and say, hey, you said they were load to load and they're coming up due. And you can't get a hold of them for a couple of days. Meanwhile, the driver goes out to that faraway route, delivers all the other houses, and then you get a hold of the customer that night, and then they say, great, I'll drop off a check or charge my credit card. Can you deliver tomorrow morning? I'm out of oil. And now an oil truck has to go all the way back where they just were, or a propane truck, and deliver fuel. So it's terrible for distribution. So it would be kind of last resort, not first tool in your toolbox. Okay. How do you feel about COD? Same problem. Terrible for distribution. Pick up a check. Yikes, that's a nightmare. How many times the customer's not home or the check was in the doorway and it blew away, quote, blew away, and the driver has to go back, so here again, terrible for distribution. Tenants are especially tough with this. One of the things I'd recommend, some propane and oil companies don't even take tenants because they say it's just too much trouble, too much risk. But if it can be, a lot of tenants are good customers and it can be a good piece of business, but it's a little bit more risky because they can move a lot faster and they don't have that much commitment. I would recommend that if you're taking on tenants, that you would want to know something about the landlord, maybe even have a relationship with the landlord, even maybe the landlord is also a customer. Because if the tenant splits, you can call the landlord and say, hey, the tenant split, they owe me a load of oil. It's about to run out. $20,000 is usually what a frozen up house costs to fix. And, we don't want to see you lose that money. What do you want us to do about this? So having a relationship with the landlord, because the landlord can warn you, say, I'm kicking this tenant out. You might want to be sure you've got your money because I'm booting them out because they're not paying me, or they're making a mess, or they're making everybody else in the building mad or something. So having that relationship with the landlord is critical. Another reason is just equipment repairs. equipment's broken, the tenant calls, says you want it fixed. Well, you're going to want to bill the landlord. Well, you're going to have talked to the landlord beforehand. You can't send the landlord a bill if they don't even know who you are and they haven't approved the charges. So if you get that all straightened out beforehand, then the tenant can call in the middle of the night and say, hey, I've got no heat. I need a technician to come over. And you can just do that seamlessly. Whereas if you haven't had that conversation, it can get really messy in the middle of the night having your technicians do the negotiating, which I really don't think you want to have happen. But the bottom line here is to try as hard as you can to avoid using delivery drivers and technicians really to collect money. Now, commercial customers, this is a whole nother ballgame. An alarming number of small businesses fail every year, and this year is going to be way worse than previous years. This has been a very tough year for small businesses, especially brand new ones. So you want to be very careful about extending credit to commercial customers. Treat them the way creditors treat you. You know, you can learn a lot about how to set up an account, a commercial account, by what companies require you to do. Okay. And things like on a customer uses a lot of fuel, maybe yearly review of their continued credit worthiness, financial statements, balance sheets, income statements, cash flow. Doesn't the bank ask you for all that stuff? Okay. What about personal guarantees? Might be an idea, especially a small brand new company. Run a credit check on the owners on their personal accounts. What's their credit score? Do they have any personal debts? Are they paying them promptly? How liquid are they? All these kinds of things would be really good information to have. And the only real time you can ask this stuff is before they become a customer. So the talents needed to be successful credit manager are, first, you have to be an excellent listener, okay? And really be able to read between the lines and what people are really trying to tell you. A lot of customers aren't that good at expressing themselves. So you have to be good at kind of helping them along, okay, and really listening to what they're trying to say. Obviously, we have to be creative problem solvers, trying to come up with ways that we can keep the customer warm and keep the company getting paid. Obviously, you also have to be a resourceful negotiator. You have to go back and forth and reach an agreement with the customer that both you and the company agree with. And finally, it's really important to have a good relationship with your operations managers and dispatchers, because especially with that load to load thing we're talking about, you've been chasing this customer for a week and suddenly it's 5 o'clock or 4 o'clock on a Friday afternoon. And you walk back to the dispatcher right after he's told the drivers, okay, we're all set, come on in, and say, could we send one of your trucks back out to deliver this guy? And could we pick up a check? You make it even worse. So you're going to be asking them first. That means the operations manager is going to be getting home late for supper. Not only the driver, but most operations managers, dispatchers don't leave till the trucks are all in the garage. Maybe they're going to have to wait. The driver is certainly going to be missing supper, and so you want to have a really good relationship with them, and you want them. You don't want to make impossible demands all the time. You don't want to be like Chicken Little where the sky is falling. You're always, every time you walk back to their office, they know it's going to be a horrible problem. Okay. You want to make sure that they know that you're trying as hard as you can not to use trucks to collect money. And that if you're asking for a favor, it's because every other avenue was explored and there's really nothing else they could do. This is not just about collecting money. Okay, collecting dollars without ensuring the next transaction is the job of a liquidator. This guy in the picture, this is not you. This is not what we want you guys to do. This type of activity and attitude just leads to unnecessary customer losses. Okay, that's probably good news, because maybe you're not built like this guy and willing to swing a baseball bat. So there's issues that are going to come up all the time. And some of them are really heartbreakers and real head scratchers. What happens if an automatic customer falls behind? When do you stop deliveries? Okay. At what point? How far behind? How big? Is it a balance? The size of the balance? The age of the balance? The fact that you haven't heard from the customer at all? What triggers it? What if a budget customer is behind on payments but still has a credit balance? We talked about that earlier. What do you do about that one? What if a customer is paying fuel deliveries on time but they're late on the equipment sales payments. So they're paying their budget payments right on time, but they bought a boiler or a water heater or a furnace back in March of last year, and you still haven't seen a penny for that. When do we stop them? When do we shut off fuel deliveries because they didn't pay service or installation charges? If a customer refuses to pay the finance charges, do you take them off? Do you take them off automatically? Who's allowed to take them off? When can you take them off? New customers out of oil, and you haven't done a credit check yet. So all of these things are dicey. And what I'm suggesting is have a conversation at your company with your supervisors and the boss or the owner or whatever how big your company is, and find out how your company wants to handle these things before they happen, so that when they do happen, you have a plan. You know what you want to do. You know how to handle it. Okay. For instance, the customer refuses to pay the finance charges. Well, of course you're not going to collect them. It's $3. Come on, but who are you going to allow to take that off? The customer service person that just answered the phone, or is it going to have to be the credit manager that makes that decision, or does it have to go up to the owner or the boss? What I would recommend, push authority as close to the customer as you can. I would let pretty much whoever is talking to the customer blow off the finance charges. They're really only there to get people to pay you quicker, really. Let's be honest. New customer out of oil, you haven't done a credit check yet. That's an obvious one. Credit card. That's the solution to that one. So it's all about creative credit. Our job is really, it's not to say no. Our job is to say how. How can we avoid stopping deliveries? How can we keep you warm? And how can we get paid? That's what you have to figure out. It's a sales job. What you're really trying to do is sell the customer on the idea that they want to move your bill up to the top of the heap. Because every month, people are going to start paying bills, and they'll write checks till they run out of money. And they rate who they're going to pay first by priority, okay? And usually priority is going to be electric company, TV, cable. Usually we're going to be kind of near the bottom. Now, granted, around about November, we'll be fairly near the top. But in April, wow, we're going to be, if everything else is on the table, we'll be on the floor in April, May, June. They don't have to pay you till Thanksgiving. They know it. So how do we move our bill up to the top of the heap? That's really the question. Now, a way to do that would be to just get them on a credit card. Did I skip one? No. Okay. To use the credit card. That's the easiest solution. And you're going to find that rates have come way down, especially with Tiger Payment Solutions. Their rates are really reasonable. So it might be worth talking to them about that if you're paying higher than that. And, I think a lot of companies were scared to use credit cards back in the old days because the rates were pretty high, but they've come down so low now that it's a no-brainer to do this. It probably costs you more to process a paper check than to process a credit card at this point. The rates are so low. So it's becoming more and more attractive credit management tool. And the trick is just roll slow paying customers into a credit card payment plan. Let's set up a plan. Say, okay, we're going to take $100 a week until you get this cleaned up or whatever. Encourage all budget customers to pay via credit cards or electric funds transfer. Okay, well, they're great tools for us. Equipment sales. The key to reach an agreement before you even start work. So you definitely should do contract on every equipment sale, and that contract should have in it payment terms. Okay, this should be spelled out clearly before you even start. The customer should sign it, you should sign it, everybody should be given a copy. Now, there's different options for how you can go about doing this. Some companies will actually let them pay for it on a credit card, and if somebody has one of those credit cards that pays you money, wow, paying for a boiler or furnace on a credit card, that's a lot of bonus points they get. So that might be really attractive to a customer. Get some money down. I would recommend you always get at least 10% down before you start, okay? Because you have to order parts, you have to get it scheduled, you have to put off other jobs for this job. So you want some good faith money from the customer. And then payment on completion, or maybe in the summer if you're slow, or spring, if your installation department's slow, you can use credit payment terms as a way to get work. So you can say, I'll tell you what, if you do the job before July 4th, we'll let you pay 30, 60, 90. One third in 30 days, one third in 60 days, and the final payment in 90 days. So that can actually become a tool as long as you do it up front and do it on purpose. Okay, you know that you're doing it going in. Now the trick is, if you extend these kind of terms, how do you avoid punishing the credit department? I know with credit departments, usually we evaluate how we're doing with credit on days outstanding. Well, if you do a whole bunch of equipment sales in June, May and June, and you will let them all pay 30, 60, 90, well, your June, July, and August AR, aging is going to look terrible on purpose. You did it on purpose. So is there a way in the computer that you can bill the customer as the payments are due, so it doesn't throw off your AR aging? Or another idea, if that's too hard to do, what you want to do is keep a yellow legal pad on your desk. And whenever you do something like this, extending credit, that's actually going to make you look bad, but make the company money, or be to the benefit of the company, just write it on the pad. So then when it gets to the end of the month and your boss comes steaming up to your desk and saying, hey, what's happened to the AR aging? You're going to say, well, you guys went out and sold a whole bunch of equipment at 30, 60, 90. That's what happened to the AR aging. You did this to yourself. Okay. So you have a record so you can defend yourself, okay, from this attack. And of course, at the end of your annual review, you have this yellow legal pad with all the things you did that helped the company that actually hurt you in the short term. Okay. So keep a list. It's a good idea. Another thing to look into with equipment sales, there are a lot of grants and low interest loans out there for upgrading to high efficiency equipment. These are all, global warming solution programs, green loan programs, things like that. In some cases, you can actually get grants. Your customer can get a grant if they're low income, to replace an oil tank or to put in a new water heater or a furnace, if they go to a high efficiency new unit. If they are making too much money to get a grant, maybe they can get a no interest or low interest loan. So definitely look into these programs. There's a lot of them available, and it can be a great value added for you to tell your customer about them and help them get set up on this program. Okay, so now let's take a break, switch gears a little bit, and let's look at, why do people get behind? I mean, it's so frustrating. You think, why don't people just pay their bills? What the hell, And so some people are just plain careless. They treat bill paying lightly. It always bothers me in school, they don't teach you about home economics anymore, how to pay your bills, how to have a budget. And some people just never learned, their parents didn't teach them. And so they think, do I really have to pay attention to these things? Is this really serious? They might not know. So sometimes education is part of your job. You have to teach people how to manage their money, because unfortunately school systems aren't doing that anymore. Maybe your company has really complicated payment procedures. Have you ever done that, where you've tried to order something and you start to read all the song and dance you have to go through to order it, and you find out, the hell with it. It's just not worth the trouble. Everybody likes to procrastinate, put it off. And a lot of people put off everything, including paying bills. Okay. Maybe they're having temporary cash flow problems. And here again, this year, especially with COVID, maybe they got laid off this spring. Maybe they had to quarantine. Maybe they had trouble working from home because their kids were home too, and they were fighting for internet time. So there may have been some kind of issues. Maybe they got laid off because their company couldn't afford it. Especially true restaurant workers. Wow, there's an industry that is getting hammered right now. Or maybe it's sickness. Maybe they caught COVID, or their family did. So that's the kind of thing you want to find out, what's happening, and whether, what you can do to help. You're going to find people that just can't manage their money, as we said earlier. Maybe it's young people, and it could be older people too. Usually when you look at a marriage, one spouse or the other, and it's kind of even as to which one it is, handles the bills. They handle all the payments, all the checks, they understand all that stuff. And the other one has no clue. They just have delegated that to their spouse. And unfortunately, the spouse that pays all the bills dies first. Well, now we've got this poor widow or widower that has no idea what they're doing. They don't know what a budget plan is. They don't know they were on some kind of 30, 60, 90 on the equipment sales. They have no idea what's going on. They don't even know where to find the checkbook, probably. And we've seen a lot of cases, I'm sure you've done it too, where you actually, they bring the checkbook in, they bring the bills, and you help them write their checks, and they, get their bills paid and help them manage. So if you have sometimes we have to do that. It's amazing. You think, why do we want to do that? Well, if you can add that kind of value for a customer, first off, just think how great it makes you feel, and just think how great it makes them feel. And maybe they're worthless kids that should have been helping out more. They're going to really be glad you're doing it too. Maybe customers deliberately stalling. Now, this used to be true when interest rates were much higher and companies were working on the float. Okay. Nowadays, with interest rates being like nothing, basically, there is no float. So I don't know if that one's much of a problem anymore, but who knows, in the future that might become a problem again. Some people are just irresponsible. They buy more than they can afford. They just run up these gigantic credit card bills, and they're just drowning in the sea of debt for all the silly stuff that they bought. They can't afford, they just can't say no to Amazon. Amazon surfing is their number one sport. This one's tough. Here again, we have to sort of train them that they got to stop doing that. Okay. There are professional deadbeats. These are the ones you really have to watch out for. They have no intention of paying you. They never had any intention of paying you. They are stealing from you, period. That's what they're doing. This is theft, okay? They are probably tenants because they move fast in and out overnight kind of thing. And they, stay, get apartments. Somehow they lie about their enough credit, enough to get their credit extended to them. And then they stiff you, they stiff the landlord, they stiff the electric company, they just split. And, there are people like that. So you do have to remember, while you're being empathetic and working with people and feeling sorry for them, there is a group out there that are really just laughing up their sleeve at you the whole time. Okay, so you got to watch out for that crowd. And then finally, the last ones are customers who are angry at you. Okay, you did something wrong, or at least in their mind, they think you did something wrong. You made a mess. Last time your technician was there, he tracked up the carpet. The driver dragged his hose through their flowers. Driver backed over into their mailbox and knocked it over. You put in a new boiler and you forgot to take the old one away because you were really busy, and you just pushed the old one to the side and it's still sitting in the basement. Okay. You can tell a customer's angry and that you're in really big trouble when the customer answers the phone and you tell them who you are and they say, "I've been waiting for you to call." And that's when you go, "Oh God, what did we do?" And that's when they tell you what you've done. And you have to be ready for that. You have to be ready to handle problems, to solve problems for customers, to handle angry customers, handle upset people. So that's another potential issue you're going to trip over. When you're doing this, you want to be really sensitive to problems. Okay, the customers are going to have, the first one is, of course, death in the family. This is so terrible. And it's really hard. You've really got to work with them and try to be as understanding and cut them as much slack as you possibly can. Job loss. This is also a serious problem. They really would love to be working, love to be paying you, but their company got closed down because of the virus. Now, I said restaurants, but just think all the companies that do business with restaurants are just as much trouble as the restaurants are. Linen services, food supply services, all of those guys are being hurt by this. So a lot of good people are losing good jobs through no fault of their own right now. Illness, okay, especially long-term illnesses, other financial issues that they may have gotten themselves into. Obviously, divorce is a horrible problem, especially if one of the parties in the divorce is responsible for paying the old fuel bill and the other one is the one that's living in the house. Okay, good luck getting them to be upset that their house is going to freeze up and it's going to be cold tonight, because they're kind of thinking they're really glad their former spouse is going to be cold tonight. So, this one's tough. And of course, the customers are angry at us, those problems. Now, the thing with all of these things is try to handle them as sensitively and as empathetically and as possibly can. Do as much to help them solve the problems as you possibly can, because customers are really on edge now, and they were really focused on who helped them and who didn't. And someday they're going to get straightened out again, and they're going to be great customers again for somebody. Okay. And they're going to remember, if you really worked with them when they were in trouble, they'll stay with you for the rest of their lives, and they'll get their friends and their relatives and everybody to become customers of yours. On the other hand, if you treated them harshly and you beat them up pretty bad, as soon as they get their act together, they're going to cancel their account and go buy from somebody else and badmouth you everywhere. They're going to tell everybody. So how you handle these definitely determines whether you get referrals. They're either going to be positive referrals, love letters, or they're going to be negative referrals. And you don't want too many of those negative referrals, because now with Angie's List and all the other online services, an angry customer has a whole bunch of ways to get even with you. Okay, we also have built-in problems: historically slow payers, past company practices. If the former credit manager at your company was pretty lax, good luck being not lax anymore. Okay. If you used to let them skate for 60 or 90 days, and now all of a sudden your boss said, no, we can't let them do that anymore. Or let's say you've just made an acquisition, your company has bought another company, and the previous company was pretty loose on their credit practices. It's going to be tough tightening them up, because here's this brand new company and you're being really mean to me and you want your money. Boy, how thoughtless of you. Okay. How about the friend or relative of the owner? Don't you love this? Have you ever noticed that 95% of your customers are really good friends with the owner of the company? Okay. And so you tell the owner of the company, when he walks by your desk the next day after you've talked to somebody like that and helped them out because they were a really good friend of the boss, you tell the boss, I helped your friend Joe the other day. He was having trouble paying his bill. And the boss looked at you and says, who are you talking about? Because of course they don't know who they are. So this can be a real problem, especially if your company is a family business. You got your name on this, their name on the side of the truck. There's going to be a lot of friends. Okay. No true documentation. It's going to be really hard collecting money, especially once you get to the legal areas where lawyers get involved, if you don't document everything you've done. Other built-in problems: sudden price falls. If you've locked the customer in at a higher price. That's why I really hate fixed prices personally, because you know that you're going to have to lower the price if it's a fixed price and the prices drop out from under it, because you'll lose your customers otherwise. But on the other hand, if the prices go way over the fixed price, there's no way in hell that you're going to get that extra money. So that's why I kind of like caps, but I'm not crazy about fixed. Price spikes can be a problem. Okay, customer, you set up the budget plan at X amount of money a month, and all of a sudden the prices go through the roof, and you have to call all those customers and say, gee, we have to increase your budget payments. They know that you do, and they're not, they'll eventually agree, but they're not going to be happy about it, and it's going to be a lot more work. So that's going to be something you have to deal with. And one that you really got to watch out for is affiliated accounts. I find that you get customers in bunches and you lose customers in bunches. Okay. Usually if you get one, especially head of a household with a bunch of kids and they all live in the area, you get the parents, you're going to get all the kids. Okay. Sometimes it's bridge clubs, church groups, sometimes we even give discounts to church groups and clubs. Well, the problem, you're recognizing the affiliated accounts. Well, remember, if you're having problems with one of them and they get upset at you, you're not just going to lose the one account you're having trouble with. They're going to tell all their friends about it, and you're going to lose all of them too. So you want to be sensitive to that, and definitely that's the kind of thing you want to ask on the credit app, and that's why you want to ask for referrals on the credit app. Not that you're going to call those referrals, but that gives you a list of names, leads, first off, and the other thing it gives you is a bunch of affiliated accounts that, these people are they're good friends and you're going to lose them all. So just good to know, when you're negotiating, how many accounts you're negotiating about. So the tactful approach is always best. We want to get paid and we want to keep the customer. So the trick is going in, you view everybody as a potential good customers with problems for us to help them solve. And very quickly, you want to try to separate out the people that are not going to pay you from the people that can't pay you from the people that will pay you eventually. Okay. And you're going to treat those three groups in a completely different way. And the older the debt, the harder it is to collect. So you got to get on this right away. So how to get paid first? Well, you can use threats. And in November, threats work great. It's, today it's snowing. Okay, boy, it's snowing out. People get scared. They suddenly get very aware of their heating system on the first snowy, cold day. And you've got their attention. So if you say, gee, if you don't pay, I'm not going to deliver, well, they're going to pay because they want a delivery. But the thing about the threats is when it gets around to April, they're going to remember that. And all of a sudden the threats have no strength at all. Okay. They're going to pay you next Thanksgiving when they need oil again. Okay. And not a penny before. And also customers are getting more and more sophisticated about this. They know the credit laws are all built to favor the customer. And it's getting harder and harder to reach any kind of fear level, to reach any kind of threat that makes any sense at all. And what you can do is just lose good customers with temporary problems by using a lot of threats. The trick is you want to try to inspire them. That's the word we want to use. Inspire them to pay us because we've developed a rapport with them, they like us, and they'll feel guilty not paying you. Guilt is the greatest motivator of all time. Let's face it, all major religions are based on guilt, okay? It works, okay? It's what gets people to do things. So you want them to feel guilty that they're not paying you. Now, the quicker the better. Making your customer aware of the delinquency is of major importance and requires immediate action. You start it as soon as they're past the credit terms. And if their third party is needed, the sooner the better, okay? So the sooner you get the third party involved, the much better odds of them getting any money. So the tools we have, the first best tool is, of course, the phone calls, because it's two-way, immediate. You're talking to them right now. They're talking to you. We're all on the same page. Letters, they're okay. I mean, they're formal, at least. You have, they can confirm things that you agreed to on the phone. That's what they're great for. And dunning notices on statements, little weaker, but sort of work. That's why a lot of companies put the final notice and the overdue on the outside of the envelope. They think that people will be embarrassed that the mailman sees that they're not paying their bills. I don't think people really care about that much anymore, but we keep doing it because it doesn't cost anything, so why not? Statement messages here again, doesn't cost anything, but why not? So why not, even though they are not very effective either. Definitely updating credit bureau reports. That's a two-way street, telling credit bureau, gee, this person stiffed me, it's a way to get even. You're not going to get any money out of that. But emails are okay. They're not a two-way thing, though. That's the problem. You never know, did they really get the email or not? And they can say they didn't get the email, so there are a way to communicate, but they're not the two-way street that a phone call is. Social media, I'm 72 years old, so I don't know. I can't think of any great social media tools, because the problem with social media, you have to maintain confidentiality on any of these collection efforts. Can't let a third party in on this. And I don't know how much social media is protected. It doesn't seem to be very protected at all. And, you could get in trouble with that. So if somebody's come up with a great idea, I'll defer to whoever has a better idea about that. You can outsource collections, though. There is some companies that have an interesting service. This is for small companies, especially where you are the credit manager and you're also the fuel dispatcher, or you're also in charge of sales or something else, and you don't have time to do all of this stuff. Maybe early intervention by a diplomatic pre-collection third-party approach would not hurt. What you do is you send the invoice to the customer. And then as soon as it hits 30 days or 40 days, you give it to this third party. It is very inexpensive to do. And the customer can either think the contact is from you or from the third party. You can decide that, with with the company that you're dealing with. And then what they usually do is cycle through a series of 3 letters and phone calls. So they call and send a letter, call and send a letter, call and send a letter 3 times. If nothing happens, then generally the companies that offer this are also third-party collection agencies. So they'll just switch over to their more aggressive program. Or if they aren't, they'll give it back to you and say, we recommend you go to a third-party collection agency. So this is available, especially if you're, as I said, if you're a small company and you wear a lot of hats, this tool may be really helpful for you. As far as a typical timeline, 30 days is typically, when it's due. A reminder call is not a bad idea, and a note on the statement. 60 days, a collection call and a letter. 90 days, a final call, another letter. 120 days, wow, settlement, legal letter, certified, registered. Okay. 150 days, legal referral, and then maybe small claims court. And you have to figure out when in this timeline you're going to hit small claims court. Okay. You'll notice in the handout, we did provide sample letters for you. So, that you can use to fill into this. You can just change the wording a little if you want to, but it just gives you an idea what you want to say. Okay, one problem that you have to watch out for is if you have a good customer, they've always paid on time, and all of a sudden they pop up on the 60-day list. And the question is, what happened here? Why aren't they paying? Don't assume just because they've always been a good payer that they don't need a reminder, that you can just ignore them, because all of a sudden at 120 days, you're gonna think, maybe something happened. Well, I'm suggesting maybe you want to find out sooner. So what the trick is with these customers, you want to help them save face, okay? You want to just say, hi, Mrs. Jones, it's very unusual that your account is not up to date. You always pay right on time. And I noticed that we missed your last payment. Is everything okay? Is there a problem, or did you not receive the bill, or are you having some issues with what's going on in the world? Talk to me. What's happening? And a lot of times you'll get the story and say, oh yeah, I'm really sorry. I've been meaning to call you. I got laid off. We're doing everything we can. I'm back to work now. I got a new job, but it's going to be a little late the next couple. This next payment. And you work out an agreement. But have a conversation. That's the important thing. Don't just let it drift, because it's going to keep drifting if you don't call. There are some new proactive credit management tools, software tools. Probably your software providers have offered some of these to you. Some features that I've heard about that sound like they've been great tools. These are just for what it's worth. You might want to ask to see if they're available to you. The first one's a look ahead. So when a customer needs a delivery, it lets you know beforehand that they're coming up, they're going to need delivery in a week or 2 weeks and they haven't paid yet. It helps you manage credit issues in advance instead of waiting until the day of delivery. The distribution department's really going to like you for that one. Automatic credit holds built into the system, so you don't have to worry about catching them. This one's a little scarier because you may cut off a good customer you cut a deal with and you forgot to cancel the automatic credit hold. But sometimes some people say, well, it's better because then everybody goes on credit hold, and then I can take them off rather than me remembering to put everybody on hold that I didn't reach an agreement with. So it depends on how you want to run your system, but that might be a tool that you'd be interested in. This can create a list of customers with credit issues that are soon due for delivery. That's similar to point number 1. If price spikes, you can change all the credit limits at once by just one click. You can up everybody's credit limit because the price of oil went up or price of propane went up. You can adjust budget payments automatically. Okay. Here again, if prices go up or down, you can automatically say, okay, raise or lower all the budget plans by 10%. And one click, and it does it all for you. It can automatically generate dunning letters. Okay. And it can document customer promises and move on and off credit hold based on promise of fulfillment. So in other words, what you have is a note page or a memo page. And that's that great tool because you can put all the promises the customer made, all the conversations, all the phone calls on there. And so that everybody else in the company is aware of it too. But basically, a credit manager's job description, as you probably figured out already, is calling people for money. That's really That's the root of what you do for a living. Okay. That's the way you get money. Okay. When to call? You can call from 8 a.m. to 9 p.m. Usually, most states. As I said, be sure you make sure in your state that that's okay, but generally that's the times that are allowed. Calling on Saturdays is okay. Calling on Sundays where it might not be illegal is kind of in bad taste, and and it doesn't seem to work that great. Now, a lot of times you're not going to get anybody. As a matter of fact, if a lot of people that owe money screen their calls on purpose, so they're just, So leave a message on the machine. Always leave a message. Give your name. And I would say first names only. I wouldn't use last name. Definitely use a last name because they might look you up in the phone book and call you at home. And unless you like getting surprise phone calls at home, I wouldn't do that. Okay. But first names only. And actually, as a matter of fact, in our company, we had it was a small company. So a lot of people kind of helped out with credit, kind of whoever was there at the time. So what we did is we used a code name. So everybody that called and asked for Rachel, we knew that was a credit call, and they got, you dealt with that customer accordingly. Said, yes, this is Rachel. How can I help? And then, what you want to leave on the message on the machine, you have to be careful about that. But you want to leave a sort of provocative message like, I was wondering if you still want to do business with us, or I'm calling about your pending delivery, okay, and ask that they return your call. Now, there's a new law that's got passed called the Fair Debt Collections Act. And it says that you may not communicate with a customer in collection of a debt at an unusual place or time that would be considered to be inconvenient to the customer. So basically the definition of an inconvenient time is between 9 p.m. at night and 8 a.m. the next morning. Don't call then. Again, a lot of companies in the old days used to do that. No, you can't do that anymore. Calling at work without permission can be considered an unusual place and could be construed to actually maybe get them in trouble at work. So if they haven't given you permission to do that, don't. Best time to call for businesses, commercial customers, Tuesday to Thursday. Okay, Monday, everybody's crazy. Friday, everybody's thinking about the weekend. Okay, Tuesday, Thursday is usually when America is kind of paying attention. Okay, work. Okay. Evenings and Saturdays are the best times to call for homeowners. So unfortunately, as a credit manager, I know that stinks, but that's your golden hours. That's when you're going to make the most, have the most success, okay, is calling early evenings and Saturday mornings. Now, the problem with the telephone is it's just a cold lump of plastic. It is really hard to get your point across with the phone. A huge amount of the way we communicate with each other is just the expression on your face and your body language. And when you're on the phone, you're losing all of that. So you have to work a whole lot harder at the things you can control. Okay, and that's the tone of your voice and the language you're using. Okay, so you want to kind of work on that. The goal is to establish rapport, kind of get so you're talking to each other, you're treating each other like real human beings and having empathy for each other. Treat them with respect. Strangely enough, I said, you can't transfer body language, but what they've found is you can actually transfer a smile over the phone. When you're smiling, your voice sounds different. And people pick that up as a smile. And what's weird about smiles is when somebody's smiling at you, you smile back. You can't help yourself. It's just automatic, and it's a lot nicer to deal with somebody who's smiling than frowning. So trying to smile while you're talking to the customer is a good thing, strangely enough, and being positive. Focus only on the customer you're speaking with, okay? No posting, doodling, other conversations kind of with your fellow employees, waving back and forth to each other, interruptions, incoming calls, all that nonsense. The most important thing you're doing right now is talking to that customer on the phone, okay? And only speak to authorized persons. And an authorized person is a name on the credit app. You can only talk to somebody whose name is on the credit app. Okay. Planning. Before you call, do a little research. Check the history. Okay. How long has this customer been with us? How long have they been paying properly? When did they get in trouble? Are they always bad? Do they always pay late? Small mistakes at this point can reflect really badly on your company. So be sure to, have an idea of who you're talking to before you call. Pick your words carefully. Avoid getting them on the defensive. So for instance, see what these two things sound like to you. You'll have to give the man a check versus we'll need to pick up a check. You see, the second one is a lot less of an attack, a lot more friendly, okay? And then getting a commitment, okay? So we'll be able to, we'll get a check the end of the week. Okay, great. Can I have, promise? Cross your heart and hope to die. Okay, then send a confirmation letter or email and say, okay, just want to confirm we talked on the phone. You said you were going to pay us on Friday. Okay, then you prepare to call. Before you call, review the file, determine the best time to call, which you should have written down, from the last time you called. Whenever you get the customer on the phone, write down the date and the time. And then you'll notice, well, gee, this customer is always home Saturday at 9 o'clock. Every time I've called, then I've got them. Every time I call in the evening, they're not home yet. They must work late or they work an evening shift or something. They're never there. So writing down when you've got them in the past is a good indicator of when you're going to be able to get them on the phone in the future. Write yourself a little script, just a couple words, things you want to remember to say. Calm demeanor. This helps you be more confident and to be more upbeat and professional. Prepare alternatives to payment in full and write them down before you start so you know what you're looking for. This is the minimum I'm going to accept. Just write it on a piece of paper because that helps you be more disciplined and more structured while you're negotiating. Remember, only talk to the person who can pay you. Don't talk to the babysitter or the kid or the grandparent or the parent. You got to talk to the person's name on the credit app. The goal is to remind them how serious the situation is and to make clear the problem has to be resolved. That's what we are trying to do here. So winning phone calls, the opening, identify yourself, here again, first names only, your company, and speak clearly, okay? Don't rush this because a lot of people are hard of hearing and they're not it takes them a minute to get plugged into the phone call. So talk slowly, carefully, clearly, okay? And the problem, ask, what are your intentions toward this bill? Make them have to explain themselves. Now, I'm going to give you a new invention called an extension form. The reason you have an extension form is probably it's an older customer and you didn't get a good credit app and you really don't have the information you need. You don't know who in the family can pay. You don't know what their cell phone number is. You don't know what their email address is. You don't know who they work for. You have a whole bunch of things you'd like to know going forward to help you collect. So this idea of the extension form kind of calls attention to the fact that they are beyond credit terms and that this is unusual and not acceptable behavior. So you say, okay, well, if you want to get an extension beyond the credit terms, I have to fill out an extension form. It'll only take a minute. Let's just go through this quickly and then ask all the questions you need to have answers to that you didn't get on the credit app or don't have in their file. Okay, so, does an extension form exist? No, of course not. Is it a legal document? No, I made it up. Okay, so but what you want to do is create one, and just use it and make it sound like a big deal. This is an extension form because you're asking for permission to break your promise. You promised you were going to pay within 30 days and you're not. So we have to have this special form and you could even say, I have to get permission to do this. That always helps when you're negotiating. If you give them the idea, you're not the last word. Okay, because I have to talk to my boss about this, and you got to give me some good excuses or good reasons to sell them on the idea, that I'm on your side, but man, is he nasty. That way, even if that's not true, you can just make all that up. It gives you somewhere to go in the negotiation. Say, well, let me see what I can do. Now, the next step in the winning phone call, the done. Show them how they can pay, what they have to pay, and then demand payment. We can't continue to provide service if you don't honor our payment policies and your promises. Okay, so there you go. I've told them we can't keep doing this. You made a promise, you got to keep your promises. And then the close. Use open-ended questions to put them on the spot and then confirm, do I have your word on that? So open-ended questions, what are they? What do I mean by this? Okay, questioning techniques. You want to ask questions that don't have a say no answer. So if you think about it, if you ask questions, these are called non-directive probes. Words that start with the letters, or the words, or I'm sorry, sentences that start with the letters. Who, what, when, why, where, how, and oh, like, oh, really? Tell me more about that. Okay. Now you think about any of those words, you can't say no. When do you plan to pay the bill? No, that doesn't make any sense. Okay. They have to talk, they have to run their mouth. Okay. And remember, there's this 80-20 rule about this, that the customer talks 80% of the time and you talk 20%. And when you talk, you ask questions that cause them to talk more. And listen hard to what they're trying to tell you. As I said, try to read between the lines. As far as listening techniques, people pay because they feel they're understood, not because they understand. Okay, so you want them to talk to you. You want them to explain it to you. You don't want to explain it to them. Okay, that makes sense. Remember, we have a saying in my sales courses: whoever's talking's buying. And if you're doing all the talking, you're the one that's buying back the debt. Okay. If they're doing all the talking, they're taking the debt on. Okay. No one ever listened themselves into trouble. A lot of people have talked themselves into trouble. Okay. So just be careful about that. Closed mouth gathers no foot. You've heard that saying before. Listening is a lot more about trust, respect, involvement, and information sharing than it is about ears. Okay. And sometimes using silence is your best tool. Most people hate silences and they will talk into the quiet just to make sure it doesn't happen. Okay. So ask a question and then shut up. Okay. When do you plan to pay this bill? And just don't say anything. And that'll eventually they'll have to say something. Okay. They'll have to answer your question. And then once they do that, repeat to confirm. Okay, let me get this straight. So you're going to stop in the office on Friday and give me a check, or we're going to put it on a credit card, or whatever we're going to do. Now, at this point, you're going to hear excuses. You're going to hear all kinds of excuses. They never got the bill. Bill must have, your driver stuck the delivery bill ticket in the door and it must have blown away because I couldn't find it. I didn't see it. I didn't know I owed you the money. As a matter of fact, I don't think I ever got the delivery. He must have delivered to the wrong house because we didn't get the delivery. Or we didn't get that many gallons. The gauge said a half, and they put 200 gallons in there. There must be something wrong with your truck. Or the check. Believe it or not, I mean, you will get this excuse. Try not to laugh when they say it, but most times you will get the check is in the mail. I mean that's where the joke came from. I don't have the money. Okay, I lost my job. I've been sick with COVID. I only get paid once a month, or I only get paid once a year. One company I worked for, we were in an agricultural area, and we had an awful lot of farmers who were customers. Well, the farmer only gets paid once a year at harvest, and that's when you're going to get paid. And you're not going to get paid before that. So up front, and so the question is, do you want to take on that piece of business or not? That they'll pay you eventually, but they aren't going to pay you until they get paid. So, you want to reach that decision before you extend credit, not afterwards, so that you're making a conscious decision. Okay, yes, I want this piece of business, even though I know that I'm not getting paid until, for 2 months or 6 months or whatever. Another excuse, I got money coming soon. Okay, we're going to get paid, or my brother's going to loan me money, or whatever. Having cash flow problems, okay? And this could be definitely a business, selling to a restaurant. Yeah, they're having cash flow problems. Or a restaurant themselves. Yeah, they're having cash flow problems. The state said you can only have 25% of your capacity, and they need 80%. The average restaurant needs 80% capacity to break even. Okay, so if their state has told them they have to run at 25%, there's no way in hell that that's going to work unless they're doing a lot of takeout. Okay, husband or wife away, they write the checks, they're on a business trip or whatever. They're going, hunting in South Dakota for, I don't know what they're doing. Okay, something's wrong with the bill. The guy wasn't here that long. He didn't put those parts in. He fixed it and he had to come back twice. There's that kind of thing. No proof of the delivery. I don't think you were here. Okay. And of course, service and installation issues. That's the callbacks and the mistakes. And we left the old boiler in the basement and forgot to take it out. I mean, all of those kinds of things. The trick with the excuses is try to work through them one at a time and eliminate them. Come up with a solution to each one of these excuses when they pop up. Okay. And sometimes you can kind of think ahead and anticipate the next excuse. So, okay, what are we going to do? We know that we're going to have a bunch of customers that are in financial trouble because of the virus. Okay, so let's figure out beforehand, what's our company policy? How are we going to handle this? You know, are we going to give them an extra 30 days? Are we going to, try and put them in touch with a state agency that, are we going to wait till the Congress passes the new unemployment law? Good luck on that one. Try to find out if the excuses are legitimate or not. Are they, are they real reasons? Are they reasons or excuses? And then with the excuses, try to create a sense of urgency that's more compelling than the excuse. It's going to get cold tonight. Okay, they're talking about snow this weekend. Hard frost is coming. Those kinds of things. Okay, it's always good if you can give them options. Partial payments. That's a great option. We'd be willing to accept a partial payment as long as you're paying. It shows good faith on your part. You're trying. We'll work with you. Put it on a credit card. We'll hold the check until a set date. Now, something very important to be careful about. Don't take a post-dated check. Post-dated checks are worthless. Okay, they can say, no, that wasn't right. They are, get a check dated for today that you promise you won't cash until Friday or next Tuesday or whatever. But don't get post-dated checks. Are not worth the paper they're written on. And then come up with some kind of payment plan. Even if it's roll them into the budget or, so much a week or whatever kind of plan you've worked out. Okay, answering machines versus voicemail. Be careful on answering machines. Don't demand payment. What you got to be careful about is assume that someone other than the debtor will be hearing the message. Okay, let's say the customer has someone that comes in every week to clean the house, or they have a visiting nurse that comes in to help invalid in the family or something. And if that third party person can hear the answering machine, and a lot of answering machines, as you know, you can hear the message, and that's how people use them to screen calls. And if a third party can hear it, you don't want to be making any demands over the answering machine. So just leave your name, your company name, a number to call you back, and a good time for them to call you back. You may say, it's important I speak with you, or I'm calling about your fuel delivery, or I'm calling whether you want to do business with us anymore. You can say things like that, but you just can't say, pay your money, you stinking deadbeat, which is what you want to say. Okay. And by the way, one message a day. Okay. Don't harass them. The dozens and dozens of messages. No, that's not cool. That's against the law. Okay. In most states. Now, be sure you have voicemail for return calls, okay? Because if you want to ever leave your desk to go to the bathroom or go to lunch or anything, you got to make sure that they have a way to leave messages for you or forward the call to somebody else who is up to speed so that they can answer, which is the more ideal thing. That, if you're not at your desk, then the call goes to Sally, and Sally knows exactly what's going on, so she can handle it instead of you. That's why we did the one first name for everybody that was in credit. So whoever, you're Rachel now because I'm leaving. Okay, so you're the credit manager at the moment. Okay, because I'm going to lunch. And then the trick with this thing is pleasant persistence. Get a promise, hold them to it. Get a promise, hold them to it. That's the way you do this. The key is to stay in touch and follow up. Get them to make realistic promises, and then if they don't keep the promise, call them back right away. Be nice, treat them like a person, treat them the way you'd like to be treated if you were in trouble, but be there. Always call back. As soon as the promise gets broken, hi, it's me again. Just wondering, you were supposed to stop in today and drop off a check, and it's 5 o'clock and you're not here yet. We're about to close the office, just wondering what's happening. Okay. Threats. Hold off any threat of stopping service or legal action until you've contacted the debtor several times without success and you see no other option. This person is just flat lying to you. They don't have the money, or they just are trying to steal from you. They are not going to pay you. Okay. Never threaten legal action unless you fully intend to follow through. The legal action you can do, collection agencies, there are still them, they're still out there. Small claims court can be great in some places. Mechanics liens, okay, can be a good threat. And of course, getting a lawyer involved is the ultimate threat. Then once you send the threat, it's imperative that you send a follow-up letter. Send a letter of confirmation prior to follow-up date. So arrangement is fresh in their mind when they get the money. Wait a minute, did I say? Okay. So the trick with these follow-up letters is keep it simple, include a copy of the bill, sign a name, give yourself a big fat title, okay? Chief Financial Executive Officer or whatever. So you sound like you're an important person, even if there's 3 of you that work for the company and you're handling credit this week, okay? Add a handwritten message. This is really cool, especially nowadays. Nobody uses handwriting anymore. Matter of fact, I don't think they even teach handwriting in school anymore. Okay, so if you actually handwrite a message with a Sharpie on the bottom of the bottom of the statement, that's really compelling. They know that you actually, a real human being, looked at it and touched it. Send an email or send it certified or FedEx if you want to really get their attention, and always keep a copy of anything you send out. So we have different, as we said, we have all these letters are in the handout. There's, you want to have different ones, and write them up beforehand. Put them in Word documents so you can just copy, paste. You don't have to write them new every time. Reminder letters, confirmation letters, partial payment received letters, final demand letters, letter confirming stopping or phone calls, and settlement letters from attorneys. Okay, so these are all the letters you want to be using. At some point in this whole thing, you may stumble across an angry or abusive customer. Okay, this is really unpleasant. I hope it doesn't happen to you too often, but once in a while it does. It's tricky how you handle this. Try to remain calm. Try not to let them pull your strings. Don't let them get under your skin and get you angry. Just try to act to help them recognize this is somebody who's out of control. They need my help to get back under control again. Okay, try not to react to what they're saying or how they're saying it if you can. This is really hard. I appreciate that, but try. Okay. Ask yourself, why are they so upset? What kicked them off? It might not be you. It might be they're having a terrible day and you're just in the right place at the wrong time. I mean, that could be the problem. Let them tell their story. Just listen, tell me all about it. What happened? What happened next? Oh, that's terrible. I don't blame you for being upset. You start agreeing with everything they say. It's going to be kind of hard to keep arguing and yelling at you if you're just agreeing with them. Okay. So don't argue. Avoid negative statements. Focus on what you can do. Focus on the positives. Get on their side. I'm on your side. Tell them that. I'm on your side. I'm here to help. We're just trying to get this straightened out so we can get you heat again. We want to get you warm. Okay. Give them room. Okay. Figuratively, back off a little bit on the phone, and definitely if you're in person, definitely back off a little bit. Give them a little space. Okay. Show empathy. Sometimes if you are in person, get them to move. Okay, that helps get them back under control because they're out of control when they're doing this. And it gives them a chance to snap back. Say, come on, let's go back, have a cup of coffee. Let's talk about this. Let's get this squared away. Come on. Do everything you can to solve the problem if possible. Okay. But there's a point. You have to draw a line in the sand. Okay. You're not getting paid enough to get abused. Okay. They can't, it's not fair for them to abuse you either. Okay. Now, I don't know, we all have a line. I don't know where your line is, and maybe some days your line is in a different place than other days. Some days we're feeling on top of the world. And you say, boy, that's some pretty creative language you used. Here's some words you missed, and you can send it right back to them, So some days we're feeling pretty tough and we could take this nonsense. We don't care what they're saying as long as they give us the damn money, you stinking deadbeat. That's what you're saying in your head. Other days, they draw blood pretty quick and you suddenly feel like you're getting angry or you're getting upset. That's when to bail out. I'm not so much worried about them. I'm worried about you. And I want to make sure you don't get yourself in trouble. Because once you get angry, you lose control. And then you start saying stupid things too. Okay. You ever watched a bar fight with 2 drunk people? It's ridiculous. Okay. And that's what's happening, because when you get angry, your brain kind of shuts down. And if both of your brains have shut down, it's going to be a pretty funny looking fight from the outside, but really serious from being on the inside of it. What we're trying to do here is find that 5% who are not going to pay you at all. And then, but the warning you want to give the customer, if they're yelling at you, say, look, if you continue to use that kind of language, I cannot help you. You may have to say that through gritted teeth. Okay. If they back off, if they say, you're right, I'm sorry, I'm out of bounds, I am so upset at your company, I'm just having a terrible day. You are not the only thing going on in my life, my kids are driving me nuts. They're both home from school, and suddenly I have to be a full-time teacher, and I'm trying to do my job, and they're trying to be on the computer, and our system keeps crashing because we don't have enough bandwidth to handle all the damn computer stuff, and it's driving me nuts. And just say, hey, I understand this is a terrible time. It's just awful. I'm having the same problems myself. And then we both calm back down, we both get back together, and we can move forward. If, on the other hand, they just keep screaming, keep yelling, hang up. Just no parting shot. You want to give them one. Okay, you really got one right on the tip of your tongue. Just hang up. Just say, I'm sorry, I can't help you when you're yelling. Click. Okay. Because it's not going to work. Nothing's going to work. Nothing's going to get better once you reach that point. There's no sense in staying on the line. And that'll be, then we decide, okay, was that the end of this? Time to send the canceled service letter? Okay. If in that whole call, they demand you not call again, do not. If they say, do not call again, that's kind of the magic button. They've pushed the magic button. They've ended the relationship. Send a demand letter with a clear time frame for response. If no reply, send them to collections. Give them to the third party, write the damn thing off and get it off your books, and give it to an attorney. Okay. Now, once you've gone to that kind of a confrontation with the customer, you have a problem. Your body is full of adrenaline. You have the stress. Your head is about to explode. You've got to escape, because stress can kill you. Okay. You've got to deal with this. Dealing with people is the most stressful job in the world. Okay. And in order to survive, we have to learn how to counteract or cope with and counteract stress. Okay. You've got to recognize you've been dinged, customer hit you, you've got a problem. Okay. The best way to do it is just tell your co-workers, I'm gotta go take a walk. Okay. I just, handle my calls. Okay. I'm going to be gone for 10 minutes, and take a walk, literally. Get out of the building, go blow off steam. If it's raining out or terrible out, or you're in a bad neighborhood, you don't really want to go outside yelling and screaming at the top of your lungs outdoors, go to the bathroom, make sure nobody's in the stall, and then tell the mirror all about it. How terrible this is, and how you hate that customer. And by the way, you hate your job, and you hate everything, and this is awful, and yell and scream all you want. Get it out of your system. Okay, blow off steam. Then take a couple of nice deep breaths. Hold it in for a second. Just deflate like a big balloon deflating. And do that a couple of times, because what happens when you get stressed, you shallow breathe. And this can make it even worse and give you headaches and all kinds of stuff. So a couple of nice deep breaths. Maybe stretch out. Any of you have cats or dogs? You ever see when they stretch? It's a wonderful feeling. Just stretch out. Oh man, there we go. I feel better already. Take a walk, maybe 1 minute vacation. At one point, I was both the service manager and the credit manager for our company. No stress there on either one of those jobs, right? And so what I had is I had a picture of this beautiful bay in the American Virgin Islands called Hawk's Nest. And I had this photograph of this beach at Hawk's Nest, where I've been lucky enough, we went camped one time on the beach, and it was an incredible vacation. So I had a picture of the beach sitting right there in front of my desk, and every time I would get into one of these bad situations, I would just sit there and look at that picture and picture myself sitting on the beach with the warm sand between my feet, maybe a pina colada in my hand, okay, and just relax and kind of put yourself there for a minute or two until you're ready to come back to reality. But so take a 1-minute vacation. And then when you win one, celebrate your victories too. You know, we used to have it, the Hedden company I first worked for. So we're back to take a 1-minute vacation. And then finally, at the Hedden company, we had a chance, a big ship's bell that hung right in the office. And whenever one of us won one, you know, we'd just go up and ring the bell and say, hey, did you guys all see what I just did with that customer? They came into the office, they're screaming and hollering and carrying on. I got them all calmed down. I got a check from them and they're going to stay with us and everything's great. Isn't that great? You know, so if nobody else is going to recognize that you're a champion and a superstar, point it out to your coworkers. Say, hey, I need some respect here. I just did something special. Or I just got this maniac was on the telephone screaming and hollering and I got them squared away and I got their credit card number right here. Okay, we got them. Okay. So celebrate your victories too, because you don't get that many of them. So enjoy them when you get them. Next is document everything. I have a sister who's a nurse and a sister-in-law, and I also work in volunteer time at a community healthcare centers. And we have laws in healthcare. If you don't write it, you didn't do it, period. Take notes on everything. Keep a tickler file to remind you about follow-up calls and letters that you need to send and promises customers have made and promises you want to hold them to. Write everything in your log. Hopefully this is on a computer by now, okay? In your company, you can put this all on a computer on a memo page attached to that customer. Dates and times you talked to them on the phone, promises you made, information you collected, name of their dog, where they work, name of their spouse. Their parents are willing to pay the bill if they can't, the name of their parents, their contact information, cell phones, email addresses, all that stuff. Put it all in there so it's all right where you can get at it. And also, most importantly, where your fellow workers can get at it. Unless you like getting phone calls from your sick bed or when you're on vacation from the office, I suggest you put this stuff in a way that your fellow workers can access the information and can make decisions for the customer without bothering you. Okay. Non-payers. So, okay, now we're into the hardcore. They aren't paying you. They're unresponsive, canceled, or non-paying customers require fast, decisive action. No response or payment means it's time to stop services and it's time to start third-party collection. It's time to delegate. Stopping service. Okay, this is an important thing that you have to do this carefully because on the credit app, you agreed to automatic delivery. You said you would keep their tank full, and now you're going to stop that. And if you don't do this properly, and this is, let's say it's a tenant, and they skip and you stop deliveries and the house freezes up and there's a $20,000 bill for water damage and repairing the pipes and fixing the walls and all that kind of stuff, the landlord's going to be asking you for money. Now, if you can prove that you did everything you were supposed to do, they have no standing. But you have to provide the customer with an explanation, demonstrate that you provided the customer with an explanation. If you don't pay, we have to cut you off. You tried to work with them, okay? You offered them alternatives, you gave them timely notice, and you treated the customer fairly. You're in a very strong position to defend yourself and your company. You won't have any problems. But if you don't do that, you could be at risk here. Now, third-party collection. The quickest one, and in some towns, some municipalities, it's a great tool, is small claims court, okay? Once you've given up, stopped delivery, and wrote off the debt, the next step would be to give it to a lawyer. The problem with lawyers is they're expensive. They're going to charge you 33% minimum, okay, of anything they collect. But of course, 33% is better, getting 67% is better than nothing, okay? By the way, the odds of a lawyer collecting money once you turn it over to them is about 11%. And the longer you wait to turn it over to them, the worse that percentage gets. One thing to be absolutely sure of is once you've gone to a lawyer or small claims court, do not, by mistake, make another delivery or give them a service call. So one of the things you want to remember is those little tags you put on the fills. Those little tags putting on the fill is a great tool to avoid mistaken deliveries, which are, as you know, a total nightmare. But you got to remember to take the tag off once you lose the customer. That's a little weird and a little embarrassing to be able to sneak up to the house and steal something off the side of their house after you've had told them to go to hell. But you're going to have to do that. Otherwise, you could end up with a mistaken delivery in there. Okay, driver remembers the house, and there's the fill, and boom, there's the tag, and he delivers to it. Using debt collection agencies to help inspire current accounts to pay faster. Do you want them back if you've gone that far? That's the question, really. Small claims court. Okay, this was supposed to be a fast, simple way for local small businesses to collect money. That was the plan. Okay. Unfortunately, this is not necessarily true anymore, especially in some areas. It really depends on your municipality. Okay, some small claims courts are still great. They're a terrific tool. Others, it's just too much bureaucracy, too much time wasted. It's just not worth it anymore. Okay. By the way, you can use lawyers for small claims. You don't have to go there yourself. You can get representatives to help you. What we find, unfortunately, with small claims court is they're increasingly oriented toward credit card companies and not toward us. So it's big companies and they have professionals that just go there, and that's what they do, is go to small claims court. However, even if you don't, end up, they skip out and don't show up on their appointed day, getting that small claims writ, that subpoena, is a fantastic tool. It scares a lot of people into paying before the court date, because a lot of people don't know this is the first time they've ever been subpoenaed. Yikes, the first time you ever get that. That's really scary stuff. And maybe they'll just pay you to make that go away because they're not sure what could happen next. Hardcore professional deadbeats, this isn't going to scare them at all. But for the rookies, you're going to, this may get you paid quicker. By the way, you cannot use small claims court if they're in the military. So it's very important that you ask if somebody's in the armed forces on the credit app so that you don't later get yourself in trouble. If the judge does give you a judgment, okay, what'll happen is usually the client or the customer won't even show up. And so the judge will just give you a judgment. Ask the judge for post-judgment interest, just for the heck of it. I mean, all they can say is no, but maybe you'll get that. It'll give you a little more leverage, going forward, something more to negotiate, something you could get. I'll take away the interest if you pay the bill, that kind of thing. Collection attorneys. These guys cost money. You have to be careful about that, but they can save you a ton of time. If the debt's over a year old, though, don't bother. They can't do anything about it. If it's that old, just write it off. You blew it. You should have gotten on this a lot sooner. Okay. Now, what they don't have is the customer knowledge, and they don't have the rapport that you have. They will treat everybody exactly the same. They have to. Okay. They will negotiate realistically, however. If they make a recommendation, take it, cut the deal. Okay, they know what they're talking about. If they say this is all we're going to get, they're right. Okay, they know the law, they're experienced, they've been here before, they probably know the judge, they know how to work the system as well as it can be worked. They're going to anticipate problems and they're going to give you realistic advice. You're paying for it, listen to it. Okay. Post-judgment, after the judgment's made, they can attach properties, they can garnish wages, they can make claims against estates, they can find people who move. There's a whole lot of skills that they have that they can do, tricks that you really can't. So if you get to Superior Court, if you're going beyond Supreme Court to Superior Court, this is for professional lawyers. This is where, an equipment sale, $15,000 boiler sale, this is where you're going to be playing, and you got to give it to the big boys. You can't never represent yourself in Superior Court. Okay, so now what about keeping score? How do you know if you're winning or losing? I'm a big believer in keeping score because, you think about it. Would anybody watch football if they didn't keep score? Would the NFL be popular if it was just a big bunch of big guys in tight gay uniforms running around banging into each other? Do you think people would watch? I don't think you'd watch very long. But if you keep score and tell me who's winning and are they going to get into the playoffs, and I get invested, I care. Well, it's the same thing with you. If you don't know if you're winning or losing, you're just going day to day, it's not motivating, you know, and it just seems like you're just pushing a rock up a hill every day, the same rock, same nonsense, same customers every year, same crap. And, you know, you don't know if you're making any progress. So I strongly urge you to keep score. So what would you keep score on? Well, watch your accounts receivable aging over time. This is the most important score keeping thing, and compare it year to year. So where were we this time last year? How many days outstanding were we this time last year? How many are we now? How many days outstanding were we last month? How many are we now? Are we getting better or are we getting worse? Okay. How about accounts turnover for collections? How many did we turn over last year this time? How many this year? How many bad debts did we write off? What about credit hold customers who ran out of fuel? That one nobody counts, but I think you ought to start counting. How many times did we use the oil truck to collect money, or the propane truck to collect money? That costs a lot of money. That's a real number your company has to pay. Okay, and maybe you ought to be keeping score of that one. So to summarize, our credit and collections professional has two jobs. Keep the customer happy and active. It's really a customer service job. It's a sales job, if you will. Okay. But keep the company profitable. You got to get paid for all this stuff. I doubt your company is a nonprofit. Now, the good news is there is tons of information about how to do this. Okay. If you Google credit and collections, there's hundreds of pages of Google pages that you can go to. We find that credit and collections people are very giving, and is a very warm, tight community, and they are delighted to help you out and give you free advice. And there are, you know, maybe even credit and collections you know, organizations you can join in your neighborhood. Or like, for instance, Vermont Fuel Dealers, there's a credit and collections division within Vermont Fuel Dealers that all the credit managers belong to. And they, back in the good old days, used to go to monthly meetings and compare notes. You can't talk about customers, but you can compare notes about procedures, projects, you know, how to work small claims court in this county or this town or whatever. So there's a lot of great information out there, you know, for you to help you out. So I want to thank you for today. I want to it's been a privilege, and I hope I've given you some ideas to help you. Now, I want to just close by thanking Rob Fawcett and the entire Tiger team for sponsoring this seminar and for helping us spotlight this need for every energy company to remove all the payment obstacles so we can get paid faster. And I want to thank Virtual Propane Expo for sponsoring this and putting on the program. So thank you again. Contact information, by the way, for Tiger is 781-585-4343 or online at tigerprocessing.com. And they have a really good website you can access to get all their information. And they really are a lot of skills that they can help you with. They are energy experts. This is their 5th generation in the energy. Rob Fawcett, the Fawcett family has been in industry for years and generations, and they know what they're doing. So take advantage of their help. Okay. Thank you again. Goodbye.